Dr. Abu Kefas, Governor of Taraba State, warmly welcomes the Northeast Governors to the beautiful city of Jalingo to the 12th Northeast Governors Forum, under the esteemed chairmanship of His Excellency Professor Babagana Umara Zulum, Governor of Borno State, scheduled to take place on the 29th of August to 31st of August.
Good afternoon and welcome to Business Daily on SOM TV, the pulse of the nation, your trusted source for in-depth analysis, market trend and key drivers shaping Nigeria's economic landscape. I am Teresa Ayuba and here are some of the headlines for today. EFCC versus POS merchant Moneypoint joins 21 billion naira fraud battle in court. CBN set October 31st deadline for payment companies to comply with ISO 2022. Record $557 million trade support with Nigerian Army tariff pressure. Now the news in full. The Federal High Court in Abuja has allowed Moneypoint, a Nigerian fintech company, to join the Economic and Financial Crime Commission (EFCC) as a co-response in the case involving alleged 21 billion fraudulent illegal double payment against some POS merchants. The case dates back to February 14, 2025, when Moneypoint petitioned the Inspector General of Police to investigate fraudulent double settlement totaling 21.480 million allegedly occurring through Providus Bank POS terminal operating by 10 POS merchants. Justice Emeka Nweti granted Moneypoint motion to join the EFCC as a co-response, citing the need for fintech platform to present material facts to aid the court dispensation to justice. The judge ordered the amendment of originating process to reflect Moneypoint as a party. This joinder ruling set a precedent for a court to join necessary parties to a dispute, provided sufficient legal reasons and presented. For business and finance stakeholders, it highlights the race of system glitch across fintech institutions, which can lead to legislation. The pending judgment is in this case may reshape the approach of fintech platform, POS merchants, and anti-graft agency, signaling strict compliance with the rule of law and administration of criminal justice. This case is currently pending, with the outcome expected to have significant implementation for the fintech industry and financial institutions in Nigeria. Fidelity Bank PLC is set to host a high-level panel session at the upcoming Fidelity Nigerian International Trade and Creative Concert in Atlanta, Georgia, USA. This season themed financing for scale, unlocking capital for global export competitiveness, will feature top executive and top leaders from Nigerian financial and entrepreneurial landscape. The FNITCC Atlanta 2025 is projected to attract over 3,000 participants and facilitate more than $400 million in trade, investment and partnership deals. Interested businesses and participants can register for the conference on Friday on the Fidelity Bank website. The Central Bank of Nigeria, CBN, has directed all payment companies to migrate to the ISO 2022 messaging standard and implement mandatory geologging of payment terminals by October 31st, 2025. This move aims to standardize quality data across Nigerian financial system and enhance oversight. All payment transaction messages must be formatted in ISO 2022, alleging with CBN and SWIFT specification. Payment terminal must have native geolocation service enabled, supported by double frequent GPC receivers and registered with a payment terminal service aggregator PTSA. With precise latitude and longitude coordinated Android OS version 10 is the minimum software required for all terminals to ensure compatibility with the National Central Switch Geolocation Monitoring System. The reform aims to strengthen Nigerians' payment infrastructure, boost transparency, and align with international best practices. Geotagging while enable the CBN to track payment terminals, reducing fraud and ensuring devices are developed by legitimate location. Exercise will commence from October 20th, 2025 to verify compliance with the new requirements. The United States has swung into a $576 million trade surplus to Nigeria in the first half of 2025, reversing a deficit of $779 million in the same period of 2024. This significant turnaround is driven by stronger American exports into Nigeria and weaker Nigerian shipments to the U.S. U.S. exports to Nigeria rose by 41% year-on-year, climbing from $2.36 billion in H1 2024 to $3.34 billion in H1 2025. Imports fell by 12% from $3.14 billion to $2.76 billion. U.S. exports to Nigeria surged to $919 million, up 196% from $310 million in June 2024. Imports grew modestly, up 29% from $493 million to $639 million. Nigerian resilience on U.S. goods. Nigerian growing resilience on U.S. goods. U.S. manufactured goods such as machinery, vehicle, and pharmaceutical has contributed to the trade surplus. Despite the surplus, the U.S. still record a $3.69 billion trade deficit for Africa in the first half of 2025. Comparison with African peers, Egypt posted the largest African surplus for the U.S. at $2.73 billion in H1 2025, with the U.S. exports growing 63% from $2.55 billion to $4.16 billion. South African American deficit, with the country almost doubled, widening from $3.38 billion in H1 2024 to $6.32 billion in H1 2025. The U.S. implemented reciprocal tariff on African partners, with Nigeria facing a 15% tariff rate. The tariff may pressure resource-driven exporters like Nigerian and Algerian, while widening American imbalance with South Africa in the metal and autos. Nigeria's capital market is set for transformative growth following the enactment of the Investment and Security Act ISA 2025, which is expected to propel the market towards a 300 trillion naira valuation, according to Dr. Emo Motimi Adgama, Director General of the Security and Exchange Commission (SEC). The act will deepen investors' protection, enhance regulatory clarity, and unlock new investment channels. Stronger safeguards for investors ensure equitable wealth distribution, enhanced framework for regulatory oversight, providing clarity on emerging assets, expanding scope of financial instruments available to institutional and retail investors, recognition of virtual assets and investment contract as securities with virtual access service provider VASPS and digital asset operators under SEC regulatory oversight. President Bola Ahmed Tinubu has commended the capital market's remarkable performance since his administration took office, highlighting the surge in market capitalization and trading volume as evidence of growing investors' confidence in Nigeria's economic reform. Market growth drivers include exchange rate stability and predictable economic policies, modernizing market infrastructure and deepening product innovation and expanding access to digital platforms for retail investors. NGX is fast-tracking major state-owned enterprise listing, include NNPC Limited and tax incentives to sustain market momentum, while SAC is also expected to continue regulatory clarity and oversight to ensure market stability and growth. 9mobile, Nigeria's fourth largest telecom operators, has recorded its first subscribers growth in 2025, adding 290,601 new subscribers in July. This gain is attributed to its recent infrastructure sharing deals with MTN, the largest mobile network operator in Nigeria. 9mobile subscriber has increased by 290 in July, marking its first gain in nearly a year. Despite the gain, 9mobile maintained its distant fourth position with a 1.61% market share. Nigerians' active mobile subscription declined to 160.1 million in July from 171.5 million in June. The deal allows 9mobile customers to access MTN network services across the country, improving coverage and reliability. 9mobile can now utilize MTN infrastructure, reduce the need for capital-intensive investment in network expansion. MTN remains the dominant player with a 52.70% market shares, followed by Airtel with 33.42%. Nigerian Teledency declined to 78.11% in July from 79.22% in June due to decrease in active telephone connections. Larifat African PLC has launched EcoCrate, Nigeria's first low-carbon ready-mix concrete, delivering a minimum 20% reduction in CO2 emission compared to conventional crates. This innovative product maintains high performance and reliability, making it suitable for various applications, including housing, commercial building, road and bridge. EcoCrete reduces CO2 emission by at least 20% compared to traditional concrete. It also superior performance across a wide range of applications suitable for residential housing, commercial building, and infrastructure projects. EcoCrete supports Nigerian transition to a greener economic and align with Lafarge African commitments to decarbonizing the construction sector. Developed through extensive research and testing, EcoCrete provides a scalable alternative to traditional concrete. By reducing carbon emission, EcoCrete helps mitigate the environmental impact of construction projects. Lafarge African continues to expand its portfolio to sustain solutions, reinforcing its commitment to innovative and environmental-friendly building practice. This company is playing a leading role in shaping Nigeria's construction landscape with low-carbon solutions that support sustained development. China's exports to Africa have jumped 25% year-on-year, reaching $122 billion so far in 2025, with Nigeria, South Africa, and Egypt leading the demand surge. This growth is reshaping Beijing trade outlook amid U.S. tariff export surged 63% year-on-year, driven by large-scale projects across the continent. Shipments more than doubled, reflecting growing demand for automotive products. Export rose in high double digits, supporting infrastructure development. Imports of Chinese solar panels are African nation climbed 60% in the 12 months through June. Chinese firms are seeking new outlets for their goods due to escalating U.S.-China trade tension. President Xi Jinping Initiate has led the foundation for this boom, with Chinese companies winning contract for large-scale projects across Africa, China, competitive pricing, and flexible credit facilities. Africa is increasing tilting towards esteemed market, particularly China and India, in its trade relation. China could bring know-how and its vast industrial machine to support African infrastructure development. The federal government has introduced a digital portal to combat fraudulent activities in housing estates, allowing Nigerians to report incidents, submit evidence, and track case progress. The Housing Fraud Reporting Portal, accessible via link unavailable, is a collaborative effort between the Federal Ministry of Housing and Urban Development, FMHUD, and the Economic and Financial Crime Commission, EFCC. Citizens can submit complaints and share evidence of fraudulent practices in the real estate sector. Users can monitor the progress of their complaint, ensuring transparency and accountability. The ministry can track project progress, evaluate contractor performance, and access project documents through the Central Performance and Compliance Project Monitor System. Minister of Housing and Urban Development, Architect Ahmed Musa Dangiwa, emphasized that the initiative aligns with the 2012 National Housing Policy, which advocates for strong regulation of the housing industry, certification of estate developers, and protection of citizens from fraudulent actors. The portal strengthens monitor of housing projects, promoting transparency and accountability in the real estate transaction. The Minister is committed to protecting citizens from fraudulent practices, ensuring a safe and reliable housing sector. The digital platform improves service delivery, enabling citizens to access housing service with ease. The Lagos State government has announced plans to regulate beach housing and other unapproved development along the coastal corridor, including Ibashi, Eleshi, Kere, and Takwa Bay. Governor Babajide Sanwo-Olu stated that the government would take firm steps to restore order, upgrade infrastructure, and ensure private development aligned with Lagos' broader urban and coastal management plans. The government aims to address chaotic development and ensure compliance with physical planning regulation. Infrastructure development will be prioritized to support the growing population and economic activities in the area. The government plans to regularize existing development, provide titles, and ensure locals are not disadvantaged. The coastal corridor holds potential for tourism and economic activities, but unregulated development could undermine long-term growth. The federal government has also tightened control over shoreline development, suspending land allocation and certificate of occupants in area under federal ownership buildings, encroaching on federal right of way to develop without proper approval. The federal government will ensure shoreline development are central controlled and properly managed. The National Pension Commission has recovered 4.57 billion naira from defaulting employers between the first quarter of 2024 and the first quarter of 2025. This recovery includes 2.12 billion naira in outstanding pension contribution and 2.45 billion naira in penalties imposed in 138 employers who failed to remit pension funds as required by law, breaking down of recovery. Q1 2024, 751.51 million naira in contribution and 1.44 billion in penalties. Q4 2024 recovery surged with a strong rebound in Q1 2025. Q1 2025, 972.12 million in contribution and 381.88 million in penalties from 19 employers. PenCom is moving from reactive enforcement to proactive prevention, focusing on real-time maintenance, monitoring and escalating sanctions from chronic defaulters. The Commission aims to reduce repeat offense through employer education and strengthen the contributory pension scheme. Organizations with 3 or more employees are required to remit pension contribution. Workers can report non-compliant employers through PENCOM whistleblowing mechanisms. The Nigerian stock market has rebounded above 141,500, gaining 321.59 points and extending its winning streak to a third straight session. The all-share index closed at 141,761.36, advancing 0.23% and bringing its year-to-date performance to 37.7%. Trading activities picked up with trading volume climbing to 605 million shares. Market performance: top gainers, NCR up 10% to 11.55 naira. SRF rate up 9.99% to 301.55 naira. Bega up 9.06% to 34.90 naira. Beta Glass up 8.16% to 486 naira. Canberra up 8.04% to 62.50 naira. Top losers: Legendent down 10% to 5.40 naira. NSL Tech down 9.26% to 0.98 naira. Cortex down 8.97 to 3.55 naira. UACN down 8.69% to 73 naira. Deep Cap down 8.29% to 1.66 naira. Trading volume and value: FCMB led the trading volume chart with 89.2 million shares traded, followed by Barrett Tax Cap with 68.4 million shares. Lavat dominated the trading volume chart with traders worth 1.6 billion naira, followed by MTN with 1.4 billion naira and GT Co with 1.1 billion naira. Market outlook: the all-share index seems to staging a mild correction from last week. Decline of momentum continues and bullish activity presides in the large stock index 142 level in the near term. Nigeria has become Africa's second largest importer of solar panels, importing 1,721 megawatts MW of solar panel in 12 months to June 2025. This put Nigeria behind only South Africa, according to a new data from energy think tank Ember. African solar import rose 60% year-on-year to reach 15.03 MW compared to 9,379 MW in previous 12 months. 20 countries set new import record and 25 countries imported at least 100 MW, up from 15 a year early. If fully installed, this import could significantly boost electricity supply in many African countries. South Africa leads the continent's solar push, Nigeria's second largest importers with 1,721 MW of solar panels. Algeria imported 1,199 MW in the past year. Sierra Leone recent imports could generate electricity equal to 61% of its 2023 output. Chad could see a 49% increase in electricity generation. Nigerian savings on diesel use and substantial, with the cost of solar panel recouped in less than 6 months by avoiding diesel expenses. President Bola Ahmed Tinubu has approved a temporary 6-month ban on the export of raw shea nut to boost Nigerian $300 million shea industry. The ban aims to curb informal trade, protect and grow the industry by promoting local processing. Key objective to secure raw material for processing factories and enable industry to run at full capacity, generate around $300 million annually in the short term, and position Nigeria to capture a significant share of the projected $9 billion global market by 2030. Transform Nigeria from an exporter to a raw shea nut to a global supplier of refined shea butter, oil, and other derivatives. Potentials for tenfold increase in revenue by 2027, creating more jobs and income opportunities, protect livelihood, dignities, and opportunities for millions of women involved in the shea industry, increase Nigerian global trade footprint, and promote rural transformation. The ban is effective immediately and subject to review after 6 months. Relevant government agencies include the Federal Ministry of Finance, will fast-track enforcement to ensure compliances. Nigerian national and private equity. This move aims to boost return from retirees and support national development. PenCom is reviewing the current 5% cap on pension fund investment in infrastructure and private equity, with new limits expected to announce before the end of the quarter. The Commission plans to reduce the regulatory requirements that mandate infrastructure funds allocate at least 60% of the portfolio to project domiciled in Nigeria. The proposed reform aims to broaden the scope of eligible investment and enhance diversification opportunities for pension fund administrators.